What's up, guys? Did I get the day right today? Pretty good, pretty good. Hell yeah, man. How'd that security update work out for you? Oh, yeah, I mean, so it's a regular thing we have to do here because we're all on like a VPN, so we have to make sure our system's up to date. But yeah, it's kind of a pain, but it's way cooler than it sounds. They actually don't care about me. It's more about the traders. They're not that interested in my shit posting on Twitter. But other than that, went well. Hell yeah, man. Yo, Chase is super high. What'd you think of the episode last night?
Absolutely.
Go ahead, Super.
Nah, you're good. Just Carter is gigabrain, first of all. And I don't own enough Woo.
Yeah, that was the thing. I was thinking maybe, is there even a point for me going on? Because I think Carter got most of the points yesterday. Saved me all the trouble.
Well, we were thinking we just dive into like your Cointelegraph background and what exactly you do at Woo, and just kind of like your role in the growth of Woo.
Well, also, yesterday we didn't get to record any of Carter's audio, so today we're actually going to be able to record all the stuff you have to say about Woo. So, yeah, he did cover a lot of it, but this stuff's going to be different, if you don't mind.
Okay. Lumping the pressure on. I like it.
No pressure. If you can't answer a question, Devin, just let us know and we'll move on to the next one.
No, it's fine. I think I can answer pretty much everything. But yeah, I guess, I don't know if I covered it yesterday, but I mean, for the last year and a half, I've been working with Cointelegraph. Actually, it's more Cointelegraph research and consulting, which is more of the strategic side. So we were doing like reports, but then recently they asked me to do a column on like China every week because I'm based here in China. So I do like this China column called Our Man in Shanghai, which has been fun because it's a good chance to kind of interact with a lot of different projects, and people are willing to open up to you when you're in that position. So I like to do it, and that's kind of what I've been doing there. I got that role thanks to a friend of mine who used to be the COO at VeChain. They were partnered with Cointelegraph Consulting on maybe in like 2018, I believe, or 2019, and they were looking to expand, and Kevin he introduced me. So that's kind of how that went. Before that, I'd been like writing for VeChain because covering their enterprise blockchain stuff that was going on. And yeah, I mean, it just goes back. I think I jumped in. I don't know why I didn't start at the beginning, but going back to 2015, I think, because I was working in China and like going cross border with payments, it was always a bit of a pain. I remember like standing in line at the Chinese banks for like 2 hours, and they're like looking at your passport, trying to figure out, what it all means. So the idea of Bitcoin always interested me, the fact that I could control that whole process. But in 2015, the infrastructure wasn't very good. So, I mean, getting on and off, they would charge a lot of fees if you could even find a platform that would do it. So it just kind of got backburnered, I think, until like mid-2017. I think Bitcoin was at 5,000 on the way up to where it eventually hit 20K by the end of the year. And that kind of piqued my interest. And then just getting into alts, like things like IOTA back then were really hot. That didn't pan out so well, but at the time, like the whole idea of like Internet of Things was really interesting. And then where did I go after that? I guess just getting into VeChain, like the Chinese community, and interacting with them, and then seeing people in the Western communities kind of trying to piece together the puzzle. And so yeah, I would just jump in from time to time and with sharing information, and then eventually it just became a full-time thing. So yeah, I mean, Carter touched on that yesterday, like how in this industry, if you're willing to like work hard and contribute, especially like as a volunteer, like people are always glad to get you on board. Then, I mean, you can kind of scare people away when you go up and you start offering your services and asking for a fee. So, I mean, like what I did was always just like, I'm here to help. I'll do everything for free. I'll say yes to everything. Like if you want me to do this, I'll do it. And I was even traveling at the beginning, like paying my own way, like to fly down to events. But it just opened so many doors, and there's so much opportunity in this space that, if you do these sort of things, you get rewarded very, very heavily. So, yeah, I mean, if anyone's like I heard yesterday a lot of people maybe were new to this space, but if they are thinking about, hey, this is something I want to do, like I always recommend just, busting your ass and doing everything for free, because the reward is the network, and that comes later, right? So that's kind of my story, how I got into it, and I guess here we are.
That's super inspirational, because that's kind of how my journey in crypto is going right now too. Is like I'm building the connections before I'm even learning how to code, which is what I'm going to be doing here soon. And so like it just opens up doors, especially if you're in this space. Not just me, but if you're young and in this space and trying to work hard and they like fit in, this space is very crucial to that. Not this space, but crypto Twitter in general.
100%.
Yeah.
Oh, go ahead, Ben.
No, go ahead.
I just wanted to add on to that. In the past few months on like crypto Twitter and Medium and stuff, just reaching out to projects and offering free help with skills I have, like video editing or graphic design and stuff. I've been able to work freelance for like 4 or 5 different crypto and NFT projects in the past 4 months. And I didn't get paid or anything, but now they've asked me for more than one piece of work, and I'm essentially hired by a few of these projects that I personally consider myself underqualified for, but like you said, just offering free help to a developing team, not many people are going to say no. And so like I said, I'm not like on salary for any of these companies, but I've worked freelance for companies I didn't even think would like open up my emails.
Mm-hmm. Yeah, and that's like the whole open source idea behind blockchain and how it got started, was just people contributing, and not even knowing who each other were. And so, I feel like that still resonates with a lot of people. And you don't see it as much during a bull market, because everybody's out there trying to grab their piece of the pie while the money's good. But if you can withstand, through a bull market and into the bear market, that's when a lot of the flaky competition goes away. And that's kind of where, that's where I kind of got my breaks, was, 2018, 2019, when everybody was panicking, and I was just, kept working. And then eventually, here we are. It's not even that long, it's like 4 years. But, you're right in the thick of things. And like working for WooTrade, it's like a great role, because their influence, not just WooTrade, but Kronos Research, the quantitative trading firm, we have connections with every exchange, and we're one of the top traders on almost every exchange. And you couldn't imagine how quickly everything accelerated, just from when I was just starting, like writing for VeChain as a volunteer, to where we are today. So yeah, that's the inspirational story. I don't know if we're gonna make like an HBO special out of it, but it's some good background info.
Hey Ben, I want to get your point of view on this. You've been in the market for a while, and I'm sure you remember like the narratives in like 2017, right? It was like, I feel like the meme back then, if I remember correctly, was just like, institutions are coming, and then the bubble popped in like 2017. And there was no like major institutions that actually like publicly announced it. What like how does it feel to see the like industry mature to the state where it is today, versus just kind of like that pipe dream what it used to be, like going in from like 2016 into 2017?
Yeah, no, that's a really good question. I think in 2017, the narrative was kind of like blockchain will change everything. So like you could make a business plan out of anything, just like stick decentralized in front of it, and you're good to go. Whether it's like video streaming, or even just anything that was ridiculous. And they were trying it, but people, I guess the idea was people didn't know what to do with it. So that was obvious. With like the enterprise space particularly, was everybody was trying to get into the blockchain side. But they were afraid to actually pull the trigger, on certain projects. So it's getting stuck in like proof of concept phase. And I think now, we're seeing, not maybe as much on the enterprise side, but definitely on the institutional side, where the Goldman Sachses and the JP Morgans and the Fidelities, they're already here. And obviously, like with the corporate treasury side, with like Tesla and Meitu, and here in China, and some other big corporations. Yeah, I mean, we've crossed that bridge. We've normalized digital assets. The whole concept has been validated on a grand scale. And, the next step, I think, is obviously like the mass adoption from like corporate treasury, or even like sovereign treasuries, where you talk about like governments and the CBDCs, and then eventually finding the link between the the central bank digital currency, finding the link between that, and then what we're used to here in the cryptocurrency side. So it's getting exciting, because you feel like, I mean, it was exciting back then, but it was a little bit different. Now it feels like we're here, we've made it, but now it's just about executing, right? It's not about like, is it a question of if? It's just a matter of when can we do it?
Yeah, absolutely. And it's just like, I've just been thinking about that over the last few days. It's just, it's like every other day, like just every, Monday through Friday, there's some massive news that comes out to where in like 2017, that particular news of that day that's just like happening every day now would have been like the news of like the month or the week. Yeah, it's just fascinating to see how quickly this is evolving. And so it kind of leads into my second question is, do you actually think, with everything that's happened like COVID, do you think that's maybe actually sped up the adoption and like the increase in digitalization of everything?
Yeah, absolutely. Like the COVID thing, people are very eager to pursue like the mobile payments route, and then digital currencies. But that's like the positive, like the pushing side. But then like the pull side, you have like the government spending, which has accelerated the value of things like deflationary assets like Bitcoin. Well, it's not deflationary, but it's close. But yeah, of course. So that's helped a lot. But I think like one of my friends, he compares like digital assets to like a baby who, when it's young, it trips over something and it just falls flat on its face. And that's what we saw in 2017 when we hit 20K, and then there's a slight pullback, and then everyone just panicked, and then just that was the baby falling flat. But now it's like it's more of a toddler, so it can kind of get over these little obstacles. So when we dropped from whatever it was, the all-time high at like 60 something, back to 55. The effect obviously was that we just picked ourselves back up, and now we're heading back to 60. So we're able to withstand these things. And one of the main reasons for that effect is the institutions here, because institutions, they tend to dampen the volatility. So what that means is basically like when the price starts going up, some institutionals are going to sell, right? I mean, we saw that with Tesla. I think Elon Musk announced they sold some of their Bitcoin. So that kind of stops the whole blow off top kind of asset value increase. But at the same time, when you start going back to 15 down to the 40s or whatever, these institutions come back in, right? And they support the price. There was nobody in 2017 who was looking after we came from 20K down to 15K that said, all right, this is the pullback. I'm going to dump all my assets in there. I mean, some retail investors did that. That was a mistake, but not the big institutions. So we're in a good position now, I feel. I was saying that, with my luck, tomorrow the market's going to take a big dump. But yeah, that's the effect it's all kind of had. And obviously, with that, we lose a lot of risk. We maybe lose some opportunity. I mean, we're probably not going to have these massive 10x on Bitcoin and 100x on alts like forever. Like I think Suju talked about that a while back, like these super cycles. Well, he called a super cycle, but like these 3-year cycles are probably going to go away, and we're going to have a more stable environment. But yeah, I mean, I wouldn't be anywhere else. This is the space that I enjoy being in. There's still going to be a lot of opportunity.
Yeah, you had kind of like touched on it a little bit. So, or I think if I heard you right, I think you did. So similar to the crash what we saw in 2018, at the beginning of 2018. Mm-hmm. Do you think those types of crash will be a thing of the past, because we have larger institutions that think on larger time frames, and so if they see a 20% dip or like 25% dip, that dip on a quality digital asset, I could see it being bought up. Is that kind of how you could see it happening, or do you think we could potentially see another blow off top?
Well, I think for normal market events, like some regulation comes out that's maybe like India bans crypto, like something like that. Like in 2017 or 2018, that would have just crashed the price completely. I think we can withstand those kind of events a little bit better. Obviously, if there was some really big black swan event, like some kind of threat of nuclear war or something, or some quantum computing sort of jump in technology, like then we could see some like real panic on digital assets. But I mean, you can't go through life preparing for that. I mean, it's I think we're in a lot more stable position, and that's why we are seeing the institutions. It's more like cause and effect, right? I mean, the institutions are here because they feel it's more stable, not we're more stable because the institutions are here. So yeah, I think definitely we're better able to withstand that, and we could still have a blow off. Like you talked about a blow off top. I mean, if government spending comes back, and we could see this massive push up into, I've heard like all the miners in China, they're always saying like 100K is definitely happening this cycle. so we'll see what happens there. But yeah.
Ben, I have a few questions before we get into Woo. So China and Asia's market and is really interesting to me, right? And we don't have a lot of access to it. So I'm curious. I know you're obviously there for work, and I'm not sure how deep you are in civilian culture, but what is the general consensus now on crypto? Because back, like in 2017, I know recently, like the federal government said that they kind of are condoning it as speculative investment. And back in 2017, that wasn't really the case. It was kind of frowned upon. But what's kind of the general consent? I know you work in the finance industry, and they're much more forefront on the Asia side. But do you hear people like on the streets talk about this type of stuff or at all?
Yeah, I mean, don't get me wrong. Like, I get down and dirty with the locals here, for sure.
That's awesome.
Yeah, funny story. Like the last week, I've heard two conversations where I was sitting there. One was like outside us, like a Starbucks, and then another one was outside, like downstairs in my house. And I was just like eavesdropping on people, and they were talking about. One was talking about Pancake Swap actually, and then the other people were talking just about like digital assets in general. So the public is like really aware of what's going on, and the speculative value to them is very, very interesting. They're not as much concerned about the whole more the philosophical ideas of decentralization and self-storing your assets.
I find that super fascinating, right? Because wouldn't someone in a borderline communist nation, or just, well, I guess, like, wouldn't that be like the appealing aspect? But they're more, they don't care about that part. It seems it's more speculative. I find that super fascinating.
Well, technically we're socialist out here in China, but like the communism thing went away like after like Deng Xiaoping in like the 90s, I think, if my history is correct. And they opened up, and yeah, I mean the obviously the financial thing, like the last 30 years in China have been a gold rush with development, and like things like housing prices have skyrocketed. So people are very cognizant of the fact that a few well-placed investments could make them very, very, very successful. And I think more so in the West, where we don't really have that same, like, I'm American, we don't really have that same, like, I want to be a millionaire, billionaire kind of a thing. Like, we're way more content to just, like, have a suburban home and drive a nice car, maybe have a boat, right? These are things that we kind of aspire to in the West, where I think in China it's more about stacking as much cash as possible. And yeah, I mean, that's kind of like a good indication of success, is like, just pure wealth. So that's that part.
That makes sense.
Mm-hmm.
So how long have you been like in China and working there, and how like, what do you feel about the culture versus there versus here socially on cryptocurrency?
Okay, well, I mean,
you kind of just touched on that, but yeah.
Yeah. I came out here like 10 years ago, right because I was a graduate in 2009, and that was like right after the GFC financial crisis. And I was a business major, so it made sense to try to jump into Mandarin and learn the language. So I mean, that's what it was. And like the first couple of years, really, really deeply, like I was in a small town and I was only with like Chinese people. So I picked up the language really quick, and then the culture as well. So that helps a lot when working in this space in China, because when you look at like our industry, it's like 50% of the hashing power comes from China on like Bitcoin mining, and then trading volumes, I think like 3/4 of it is from Asia. I mean, obviously they're like different, more than just China, but a lot of the industry is centered here. So yeah, I find it so fascinating, and I like don't really want to leave at this moment, just because I feel like places like Shanghai, Hong Kong, Singapore, this is really driving the industry. In terms of like people are a lot less resistant to it. Like back home, if you bring up cryptocurrencies to someone, like their first thing is like, oh, that's a scam, but like here, it's kind of they're a lot more interested, and they're obviously interested in more in the speculative value, like I touched on. But I feel like people are more open to technological change, which is why like we're totally cashless here in China, like mobile payments, QR codes, like everything. If you're talking about like from buying a Coke in a supermarket, like you're not going to pull out cash for that. So yeah,
that's awesome.
The
only reason I kind of asked you to elaborate on this after Chase brought up institution, right, is because if the sheer number of Chinese people, and the more they adopt it, it is almost like its own institution in and of itself, right? Like if more and more of Chinese and Indian people that get on board, just the sheer volume of retail that they can produce is almost in and of itself like an institutional purchase, right?
Absolutely. And the thing with in general, Chinese citizens tend to have like more cash savings than the counterparts in the U.S. because, well, in the U.S. we just buy everything on credit cards and we don't have to save ever because we know we have like banks to lend us money if we need it. But culture is very different. So when they invest, like they typically invest a lot more, and that's why people always talk about like the Chinese whales. And that's kind of what drove up the Ethereum prices way back in like 2016, 2017. And then later it was EOS that got driven up by Chinese buyers. This year we saw it with DOT. And now we're seeing it with Doge. Like a lot of people are into Doge out here just because they don't care about fundamentals, right? It's more about which project has the momentum and is going to, succeed, right? They trade it more as like just a investment product rather than like a company you believe in, like we might do more of in the West. So yeah, I mean, absolutely, they have a huge effect on markets, and you can get a lot of alpha just by kind of seeing what's going on Chinese social media. Filecoin was another one. Like when Filecoin shot up recently, like that, it was obvious like a week prior that people were talking about it, and then it like doubled or tripled a few weeks later. So yeah, that's.
I read an article about like South Korea having a problem with its workforce. Like so many people are leaving to work and trade in crypto. Do you see that in China, or is it still kind of early and people are just kind of putting their paychecks in it as investments?
Yeah, I haven't seen that one yet. Yeah, I don't know. We'll have to keep my eye out, but it's I think people are still motivated here. Like even if they make $1 million or $2 million, like they're not going to go buy a Lambo and then go just
they don't really retire. They just become moguls.
Yeah, exactly. So yeah, that's why a lot of the VCs coming out of China, like they were just people who are very early in either the mining space or the crypto space.
Appreciate it, Ben. Well, I've been talking a lot. I'll let everyone else take over.
Hey, Ben, I had a question. Within Shanghai, are you seeing retailers actually accept crypto as payment?
Not really, and that's because there's not really a need for it. Like the digital payments are already like everywhere, so it's much easier for me to spend like the RMB, which is like I just whip out WeChat or Alipay. These are the two main apps, and you can like every counter has a QR code on it, or they scan you. But either way, it's very quick, and like the whole digital payments idea, I think like a blockchain's never going to be as fast as like a centralized payment, right? So I think the way digital assets like Bitcoin are going to fit in is going to be as more of like a utility token or a store of value or some sort of investment product, whereas like the actual transfer of money would still probably be more suited for like a digital currency, like a central bank digital currency, or like WeChat Pay, Alipay type of situation.
Got it. And like from your perspective in the West, do you see crypto being used as a payment method, or is it going to wind up being the same thing that's happening out in Asia? In your opinion?
I think in like countries where like the currency is an issue, like if you talk about like Venezuela or Zimbabwe or someplace like that, Nigeria, where inflation's a big thing, I think it could, just because the local currencies, it's hard, and then getting a hold of dollars is also hard. So yeah, that would work. In the U.S., I don't think we have a need for it either. Just because credit cards are accepted everywhere, and it's easier because you get 2% cash back or whatever, and you can charge back if your card was stolen or something. So like that kind of thing is actually superior to doing a 10-minute Bitcoin confirmation. But yeah, I think cryptocurrency will succeed where it's needed as a transfer of value. But for most parts, it's more than that.
Got it. Yeah, interesting. Like you say, where it's needed. Like from your perspective, where do you feel like crypto is most needed right now?
Absolutely, in like the DeFi space. I mean, when you look at like banks are paying like 0.5% interest or no interest at all on your savings, like it's really hard to outpace inflation. So like that's one place where things like Aave, Compound, they're a little bit more secure than like the BSC farms, right? I mean, like those are needed. I think like if I have a lot of money, like I'm gonna want to put it somewhere where I can earn 5%, 6% on my assets, especially stablecoin assets, if I'm particularly risk averse. That's where it's definitely needed. That would be the big thing. But then we're still developing more use cases. Like the lending seems very interesting for people who are more aggressive with their management strategy, and just investment products. And that's something that WooTrade's building as well that we might have time to get into a little bit later. But yeah, wealth accumulation always comes from these type of investment products, and like in the past that was always reserved for like the elite of society or the people who have like financial advisors. And it's really hard for like say like a high school math teacher or something to decide, hey, I'm going to put all my money in this like high frequency trading strategy, this hedge fund managing my money. Like that doesn't happen, and so you get this widening gap between the elite, the 1%, if you will, and then everybody else.
100%. Connor, I saw you had a question.
Yeah, you touched on Alipay earlier, like Alibaba technology. As someone who interacts with Alibaba, everything I read about it is it's extremely successful in China, right? But it just has a terrible time, like on the stock market as of late. Do you have any opinions on that? If like it just seems it would be odd if like Amazon was killing it in the United States and it just kept getting dumped on.
Well, the Chinese stock market in general has struggled a little bit to really grow at the same rate as the Western one, and I think a lot of that has to do with the mindset of Chinese companies that when they get listed, they tend to take their foot off the pedal a little bit in terms of like maintaining stock price. So that's one thing. I mean, basically getting listed on a stock exchange just means you have exit liquidity for your own company shares. So I think that has hurt a little bit. Yeah. I mean, that's what a lot of people are thinking about the Coinbase, and finally all the early investors are going to be able to dump their liquidity. But the Coinbase price isn't looking so hot these days, so that probably is what happened. But in terms of Alibaba itself, like they have a lot of geopolitical issues because of the way their model was set up. They were doing a lot of like peer-to-peer lending, which is very strictly regulated in China, and you're not allowed to go over a certain interest rate. And some of their products were doing that kind of through loopholes, and so the government kind of cracked down on it. And then Jack Ma, who is their very like he's like the Jeff Bezos of China. He he kind of lashed out, and that was a bad idea because you can't really put yourself on the wrong side of the central government. So that also, has a big impact on how Alibaba's financial future is perceived. Right now, the government's breaking up Ant Group, which is part of Alibaba. That's like the one that does the Alipay itself, because it's a very powerful financial network. It's like PayPal, but it's more integrated into our lives. Down to the point where like you pay for the subway, you pay for just everything with like this. You pay for like utility bills and stuff. So when the government started realizing that this was kind of going rogue a bit, and they stepped in, it really, limited, I guess, the profitability, because if you're a private company, you can make a lot of money, but if you're becoming slightly less private, then it's hard to be as profitable. So that's probably why Alibaba is struggling a bit.
Hey, Ben, kind of switching gears. For the people that weren't here yesterday, could you go in on what WooTrade is and the future of where Woo is going?
Oh, we're talking about WooTrade? I thought this was all China. No, I'm kidding. Like, the WooTrade. Yeah, I think Carter did a really good job yesterday. But basically, what WooTrade is, it's like kind of a solution to the fragmented liquidity issue, which is all over. We have these little islands, which are exchanges or OTC desks or wallets where liquidity exists. But that's not very good for a trading environment because obviously then you get things like price slippage, and big institutional buyers don't want to enter a market that they can't get in and out of very quickly, right? So that's a major deterrent for adoption. And so what we do, and this stems from our background as quantitative traders, where we were asked to trade on all the top exchanges. But we found that that's very resource intensive, because every time you do that, you have to go through very stringent KYC processes. You have to deposit capital onto these platforms, which is not, it's a risk, right? And it's not efficient because you don't have as much flexibility. So this was something that had been bothering the people at Kronos Research. So WooTrade is kind of a solution to that, where we created a giant pool, and then everybody connects to us instead of us connecting to them. So that's how that works. And this is not a new concept. This is what was called a dark pool in traditional finance. And one of the founders, Jack, had been managing that for a number of institutional firms in traditional finance before coming here. And then one of the other founders, Mark, he was one of the top quantitative electronic trading. He was managing a team for Citadel, which is quite popular these days as a topic because of the whole Robinhood fiasco. But I mean, these two guys, you don't meet people like them in crypto very often. Like when you go to crypto meetups and you're talking to teams, a lot of it is like indie software devs, and there's nothing wrong with that. I mean, some of these people are very talented, but people of this caliber in terms of experience and networks and I guess resources, you don't find them very often. So that's one of the reasons why I was very eager to join WooTrade. But so anyway, we've got this dark pool now, and we're connecting to a bunch of different exchanges and wallets and things like that. And then last summer, the whole DeFi summer happened, and the founders were very big CeFi guys because they've done that their whole lives. And we took a look at it, and we realized we can do the exact same thing in the DeFi space with even more potential upside. And so we started doing that as well. And the whole thing has gotten very, very popular lately. We launched a token about 6 months ago, and we shot from like 700 or 800 by market cap, with a market cap of like 15 million, to where we are now. I think we're at 600 million, and we're like the number 140 around there by ranking. And I feel like this is just the beginning, because our team is very large, very talented, and we have a very strong network, and we're platform agnostic, which means we can help anybody. We can integrate with anybody, very similar to Chainlink in that regard. So we're building very strong ties with the blockchain community, the DeFi, the CeFi community, with everything. And it's been quite a journey this last 6 months. It's flown by. And I'm really looking forward to seeing what happens over the next 6 months, because looking up the CoinGecko rankings, I mean, there's a lot of places I feel like we could climb up and build some really cool products in the process. I mean, that's the most important thing.
then speaking of your products, could you talk on your the Woo Ventures? That kind of piqued my interest when I saw that.
Yeah, I mean, Woo Ventures, like in a bull market, everybody wants to be a VC because all these deals, when they launch, they're 10xing without people even bothering to read a white paper. So a VC is a very profitable thing in a bull market. But what we do is we look to invest in projects that can add value to either Kronos or WooTrade. And I should probably explain the relationship there. Like Kronos founders are the same as the WooTrade founders, and we're kind of like one's a market maker, and then one's the liquidity solution, right? And we operate out of similar offices, and we have a lot of shared resources. Like for example, something like a HR recruiter might work on both sides, whereas like maybe a front end developer would work on WooTrade only. For me myself, I'm mostly focused on WooTrade, so we're very tightly connected, and that's the relationship there. I don't think that was your question, but what was your question again? I got a little bit off track with that one.
No, I mean that was great info, but just kind of specifically around the Woo Ventures. Like I have like
Woo Ventures, there we go.
I think it is, but I just want to see what it actually is.
Yeah, so we got two entities, right? We have Kronos and WooTrade, and both of them have different needs, and we look to invest in products, in companies and people that we think are going to add value. Because when you invest in a team, you can kind of build things together, right? And like we did that with Dodo very early on. Dodo EX, it's a DEX, it's on Ethereum, BSC, and a few other chains now. We invested very early in them, and then we've been collaborating this whole time. So you build really tight relationships. That's good. So we have an advantage because a lot of VCs, it's a very shallow integration. Basically, the VC will dump like 100K into the project for tokens at a highly discounted rate, and then they'll put their logo, on the project website, and that's pretty much it. Like they might have a phone call every 6 months to kind of catch up, but for us, it's a lot different because we need people who are going to build with us, like Dodo did, or projects that we can provide a lot of support for. And for someone like Kronos as a market maker, like if you're just starting out as a project and you need liquidity, like someone like Kronos can be like a complete lifesaver for a project like that. And not just actually going out actively and providing liquidity, but just the knowledge of, because a lot of these people who are developers, they're not traders. They don't understand how liquidity works. They don't understand the relationship with exchanges, and we can kind of help out with all of that. And on top of that, now we have our own network with WooTrade, where if a token gets listed there, it's like liquidity support on all these different institutions, over 20 that are connected. So it saves the project the time from having to go out and, BD, do business development on all these different projects, or all these different exchanges, I mean. So that's another thing. And so we add a lot of value, basically, long story short. So we are investing in certain projects, and that's how we want to create some like launch pads for our our Woo token holders. Basically, they'll be able to get some of the benefit out of this because we're using the WooTrade brand, we're using the Kronos brand to do these sort of things, and we want people with Woo Ventures to, we're more decentralized now, to also reap some of that benefit. So there's going to be airdrops to Woo token holders for other projects. So it's kind of like an IDO platform. Only the purpose is not to IDO; it's more of to reward Woo holders for enabling this sort of business model.
Yeah, that's super interesting from a business model perspective because it almost kind of gives like statistically you have a greater chance of success if like you're one of the projects picked by Woo, right? Because you have that kind of like that backing, that infrastructure in place, which liquidity is like one of the most important things to have when you're fresh off the ground running.
Yeah, definitely. And like Alameda is also very active in this space, and they provide similar benefits and insights. But yeah, I think going forward, like WooTrade and Kronos are going to be like one of those names that you want to have on a platform. And we're very, very stringent with our DD process, like our due diligence process. Sorry, we go through. So if you're sitting at home and you're like, I kind of want to get a piece of the action, but I don't really want to go out and research all these projects, and even if I did, I wouldn't know what to look for. Like kind of keeping an eye on what we're doing is a good strategy. or you just can be a UX staker and then also get the airdrops and not have to worry about it anyway. So that's a win-win.
Yeah, that's actually a good segue into my next question. I was going to actually ask, like, are you involved on these researching the firms that you guys are going to go, or the projects you guys are going to go with?
We have a team. We have a team that does it. I think there's like 4 or 5 people. But like I'm definitely involved because from like I help out on the BD side. So sometimes I'll jump on the calls early on, and then as it's discussed in our internal groups, like I'll also share some opinions if I have any. A lot of the times now I don't, just because there's so many projects coming out that I've never heard of, and there's just no way to keep track of it all. But yeah, and then once obviously we get to a stage where we're signing contracts and stuff, then I will get back involved from a marketing perspective and support their side with that. So yeah, like I try to get involved as much as possible with everything the company's doing because it's just a passion of mine. And yeah, I guess that probably answers that question.
No, it does. So like, you know, with the base the base space, we have a lot of base people, right? We have a lot of people who do a lot of deep dives. So if somebody was interested in kind of being in that particular role in the industry, like, would you have like advice on how to kind of like onboard or how to kind of like step foot into that world and get noticed?
You're talking about like doing like DeFi or investment analysis, this type of a role?
Yeah, just and then also like the deep dive research behind projects.
Okay, I mean, really having a strong financial background is always a plus because you have to be able to, you know, assess kind of the different profitability of these potential companies down the road and you know how they're being set up for their first raises and things like that. So we have one team member who is from some very top like financial advisory firms in the traditional space. So he has a really strong background there, and he can get into like the contracts and everything. And then on top of that, we also have obviously like tech people who are able to look at if they have like an MVP, a minimum viable product, something like that, to kind of look at it. And then we have one guy who's just like a DeFi degen, like who's just been in the space for so long, and he kind of recognizes the different tokenomic models. And that's something you can't get from like traditional experience. Like you kind of have to be a degen to understand that. So, I mean, there's a lot of opportunity now. I know a lot of people are setting up VC firms, and you know, if we do dip into a bear market, probably a lot of them are going to go away, which happened before. The same thing happened in 2017, 2018. Like everyone was starting a fund, and then a lot of them died. But yeah, I mean, you definitely want to put yourself in a sustainable position, being very patient right now because not everything that comes along is going to succeed. In fact, probably about 90% of them are going to fail in a few years. So yeah, I mean, just being active and researching it, and then, like I said before, networking is everything. If you can provide value to these VCs or these projects, then they'll definitely start including you in their conversations. Like we do that all the time in WooTrade. I think we've hired from the community already twice, and well, I mean, I also came from the community, so that it would have to include me as well. But yeah, so once you get in the circles, then you got your foot in the door.
Hey, Ben, I have a question if you don't mind. I was asking Carter a couple of questions. Hi, do you guys mind?
No, I'm looking forward to the question. I actually heard your question yesterday.
Did you? I don't know which one you heard, but I was hoping to clarify a little bit on one of them. So, WooTrade won't be open to U.S. residents, right? But we're able to access the DeFi pools. Can you touch on that a little bit? Like, what exactly are the DeFi pools? How do those work? Like, what will we have access to? Because I know I'm in the United States. I've been following Woo, but I can't use the exchange. What is it exactly that I will be able to do with Woo?
Okay, like first, just on the regulatory side, like we've been very clear, like the U.S. it's a huge market. It's very important, and I can't see a route that over the next decade, if we end up to succeed, that doesn't involve at some point going through the U.S., right? But the thing with the regulatory thing is you're either out until you're in, right? So we can't sit here and say, oh, we're going to be there next month because that's something that from a regulatory perspective, you're not supposed to say. And also, something could change next month. There could be some new policy in Washington, and then suddenly we're back to square one. So we have to keep expectations grounded until we're in. But that's that part. On the DeFi side, we're incredibly bullish just because the whole experience has been so much smoother when you meet, for example, like a CeFi exchange, and you start the whole process. There's meetings. And then you have to get the tech people involved, and there's more meetings. And then you have to get the legal people involved, and there's more meetings. And then you get everything kind of in the right place, and then you have to wait for them to send funds, and sometimes that takes, a week or two. The whole process just drags forever, right? And then you end up with some tier 2 exchange on your platform, and their volume's okay, but it's not blowing the doors off of anyone. You jump into DeFi, by contrast. We created 5 pools on BSC. We put 2.5 million total spread across 5 pools into these 5 smart contracts, and we connected it to a front end, Dodo, and then Dodo was automatically being aggregated by 1inch and OpenOcean, and we actually got on a call with 1inch, and we're like, hey, we got these pools, would you aggregate them? And then they kind of went and they said, wait, aren't you guys with Dodo? And it's like, yeah, well, you're already aggregated. So it was just like that whole process just got streamlined, right? So we're incredibly bullish on that. Another reason why is from a trading perspective, the one thing we don't want are very aggressive, high-frequency trading teams, because those are very toxic to a market maker. They can make a market maker lose money, right? And as a market maker, we want to get the spreads as tight as possible. That creates the best user experience for the trader. So what actually happens in DeFi is the block times reduce the ability for high-frequency traders to run their aggressive strategy. So it's like a filter out all the toxic flow. So this is a second reason why we really want to be more involved in the DeFi space. So right now we're trying to set up products that are going to capture the value, but also, really enhance the strategic advantages that we have at WooTrade. And whether that's a DEX, whether that's like a margin trading platform, whether that's a cross-chain DEX, or whether it's all those things combined, also things like yield aggregators and stuff, all things we can build very easily because we're good at trading, we're good at generating yield through trading. And these two things, that's the secret weapon for any platform. If you can do that successfully, then you're going to have users. You're going to have a lot of users. So now the challenge is to put together a team. We're doing that now, including blockchain engineers, product managers, security, people on security, also front end, and we're going to start building these products. And that's going to be in the DeFi space. We're going to try to be on as many networks as possible, and we're going to try to capture as many users that we can with this kind of idea that you'll get the best trading experience on our platform, and you'll get sustainable yield. We're not talking about just inflationary rewards that we just mint to drive users here, but it's actually yield generated through trading activities on the platform, and that's going to be the DeFi, and that's something that we're pivoting towards very hard because the growth potential there is really high. So hopefully that brings some clarity, Jen.
Yeah, no, it does. Thank you. You mentioned something about, to quote you, is not going to be possible, but it made me think of the Woo Oracle. Right?
Mm-hmm.
It's so that solves the problem of you're basically using that to get all of the pricing, right then, at the moment, pricing from the different exchanges. Mm-hmm. What exactly? Because I keep seeing more talk of it, right? I know there's something coming up about, the Woo Oracle. In a couple of days, I just saw an announcement today. Can you explain that a little bit to me?
Sure.
Everybody, I guess, not just me. Hopefully everybody else will benefit from this question also.
Well, everybody else needs to turn off their microphones. I'll talk to Jen real quick, and then.
Sorry, no, I didn't mean.
No, I'm kidding. Absolutely, Jen. So it's a good question, and it's something we haven't been very public about. And the reason is because we haven't really completely figured out where we want to go with it. That's an honest answer. Okay. Basically, the Oracle, that's the in-house
Oracle,
nickname
okay.
we came up for just because it's Woo Oracle, right? It's whatever. It's a solution to the fact that we had these private pools, and we don't want to use the AMM formula because the AMM formula that like Uniswap uses. It's very simple. It's just like X plus Y equals K. And basically that means if there's less liquidity on one side, the price goes up, right? But we want to use our institutional market making strategies, which we tell them the price. And then if our pools get out of balance, we can rebalance them from our CFI network. So that's kind of the recipe. And in order to do that, we needed an oracle that would be able to be updated with the parameters that we need. And when I say parameters, I usually mean the spread for one and the fee. Those are the two main ones. And then the frequency that we update. So right now we're updating every time the price moves about 0.2%, which is quite high, quite often, quite frequent. And if oracles don't update frequently, then you have inaccurate pricing. And it's very easy for people who are the LPs, the liquidity providers, they bear the brunt of that cost, right? So if people are trading at an inaccurate price, the LPs are getting ripped off. So with us, we are the LPs. It's our own money. And we are using the oracle to just inject pricing from our centralized market making into the blockchain. And originally we just did that because we needed a solution and it was working. But then we realized, well, it's in the blockchain. Anybody can query this information. So we made a doc, we made it public, and a few projects approached us. So like, can we use this? It's like, what, you want to use it? Just go go use it. Here's a smart contract address. But once we saw that there was some demand for this kind of thing, like really accurate trade data pricing, then we, started to build it up a little bit more. And some things we're working on is like an advanced mode for people who have more specific needs, and we would be able to monetize that. But that's down the road. Right now, we're just trying to make it more accessible and more free. And then the other thing, I know there's a lot of Chainlink supporters here. Like we are very close with Chainlink, and we want to find a way because Chainlink has this huge audience of projects and partners already. So like the easiest path is through collaboration and just maybe working with them to make this data more accessible to their clients, and then building this sort of thing together. So that's kind of what we're doing. We're not out here trying to be an oracle provider. It's more of just we want to provide very accurate trade data very often to the blockchain, and anyone who wants to use that can use it. So
you filled a void that needed to be filled for traders.
Exactly. And it's a big one because if you're a platform and your users are losing money, like that, there goes all the trust in your platform. So it's kind of like a killer if you don't have that.
Okay. And then since you brought up Chainlink, if I may ask one more question, I think it was in December that the integration announcement came out. I could be mistaken. It could have been before that, October, I don't know. But Chainlink was bringing the trades made by the traders on chain. What was it that they were doing? Is that if there are future tokens that the traders want to create, or what was the actual integration with Chainlink? Is that still going? Are you still working with them on that?
Uh-oh, we might have lost Ben.
Yeah, his internet's spotty. This happened yesterday as well.
Oh, darn. Sorry, guys.
You did it, Ben.
Your question scared him away.
hold on. Ben, if you restart the Twitter mobile app and join back, it fixes it a lot of the time. Or just leave the space and join back.
Yeah, I'll shoot him a quick DM.
They can usually still hear us. They can't talk, though, is what I've heard.
Oh, that's what happens?
Yeah.
And my internet's spotty, too. Might be Twitter space. I don't know.
I had a few questions about, like, the KYC process with dark protocols after Jen's question. Because, I don't know.
What do you mean dark protocols?
Well, because I know, like, an exchange, like, wait, Ben, are you here? I thought I just...
Yeah, sorry, guys. I kept getting...
there he is.
Yeah, I keep getting a phone call. This is the problem with Twitter Spaces. Like, this delivery guy was trying to get a hold of me. But yeah, the thing with Chainlink, like, that's going on. We're very close to them. Both Philip, he's in China, and then some of the people on the international team as well. for traders, like one of the issues was they want to have their data, like their volumes confirmed, but they don't want to have like this actual method of getting it confirmed, because then other people could, use these strategies. So this is a problem like our own quant firm has, with getting new clients to believe that, hey, we create these returns, go ahead and give us $1 million of your money, and we can replicate this. Right? It's very hard for somebody who doesn't know us to trust us in that sense, and then make that send that capital to us. So with Chainlink, we're working on something that would be able to verify without completely giving away all the information, right? So this is kind of a common thing now in blockchain with like zero knowledge, like ZK. Like it knows you did something, it doesn't know how you did it, but it knows you did it, right? So that's the thing that we're working on Chainlink with. And then of course, in terms of like market data pricing and like the trade data, like that's all stuff that we're always actively looking to make more transparent to the community. So yeah, that's
Ben, I had a question. You talked a little bit about Dark Protocol and Blue looking for solutions in KYC and like limiting people's deposits and withdrawals without certain levels of identification. Does the Woo exchange, like, is that gonna still transfer over? Like, how does the Dark Protocol solve that? Like FTX, I know, like, unless you do certain levels of KYC and identification, you can only withdraw like an equivalent of like 9,000 USD a day of crypto. Does Woo get rid of that entirely?
Well, WooX is one of our products, right? You can think of it like WooTrade is this giant network, and then WooX is one product. And so you're probably referring to the exchange WooX. And for that, it's basically a CeFi exchange aimed at active traders right now, very active, maybe slightly touching into the professional trading space. So for that, yeah, KYC, it has to be done. Like we operate in a very regulatory, transparent environment. That headquarters, that product team is based in Taiwan, where they have rules about KYC and AML. And if we do want to move into jurisdictions like North America, for example, you want to have a sparkling clean reputation. Not just North America, also China would be another one, right? You want to be clean. You don't want to have a history of something like BitMEX, for example, because it's really hard to come back from that. So we're doing everything we can to position ourselves in a position where we can succeed in the future in a regulatory friendly environment. So yeah, that's kind of the position. You'll have to KYC. We have a third-party KYC provider who we're integrating now. And so basically they will handle the processes. Like it happens in the back end. If you interact with an exchange, most of them use like a third party anyway. So it'll all be very streamlined and painless.
I guess my question is, like, down the line, once you're established and your record's clean, does the technology of Dark Protocols kind of allow for retail to do no KYC, unlimited retail withdrawal? Or no, not really?
Well, DeFi, it would. Like, we're essentially in the DeFi with these pools. We're reflecting the prices on the CeFi network into DeFi. So for DeFi, there are a lot fewer limitations on what you can do. So yeah, that would probably happen, and it probably most likely happen on a very fast network, or like a layer 2, where you would have that same CeFi experience, but in a DeFi world.
Yeah, because I just see the problem. Like, I understand the problem and the importance of KYC, right? But a lot of this crypto stuff, like the fundamental of it is decentralization and anonymity, right? And like some of these traders on FTX are hitting huge longs, and they don't want to go through certain levels of KYC. They're stuck withdrawing $9,000 for like with the rest of their life every day. If you want like $10 million, right? Like you could, if you don't want to give up your KYC and ID, you're kind of just stuck withdrawing $9,000 worth of crypto for infinity. I see whichever kind of exchange or DeFi protocol has a solution for that kind of wins. I was just curious
if DeFi in general,
where Woo stood on that.
Yeah, obviously. yeah, obviously WooTrade is not going to just go like flaunting the whole like, oh, we're going to dip under the KYC rules by going to DeFi. But I think DeFi in general will have that effect where you look at an exchange like DYDX, it's on a layer 2. It's very close to a CeFi experience. And the DeFi platforms, eventually someone's going to build a Binance-like product on a DeFi layer 2 network. So at that point, I think some of these KYC issues are going to go away. And we might build that product ourselves, or we might just be a liquidity solution in the back. That remains to be seen, but that's the future we're heading towards.
100%. Yeah, I just see that like the withdrawal and deposit caps is kind of a huge problem for successful retail and even like smaller cap institution, right? Like if they're worried about taxes and capital gains and stuff, like tax evasion is illegal, but tax avoidance isn't. So like if these people are worried about the best way to get their winnings off these exchanges, right, and you're just capping them out at 5 to 10K a day, that kind of stops a small cap institution, successful retail from really like succeeding.
Yeah, exactly.
I have another question, if I may. Sorry. I just want to understand. I want to know if I'm understanding this correctly. So I can't use WooTrade, but if you are working with Uniswap or with 1inch, right, and I go on Ethereum, whatever, and if I go through 1inch, then ultimately would I have access to all of Woo's liquidity through 1inch also?
Yeah, exactly. And I mean, that's the cool thing about DeFi is, a lot of times the people using it don't even know that they're hitting WooTrade smart contracts. And if you look at it, it's public information. You can go on BSC scan. It's on BSC, and you can see like a lot of the volume is coming from 2 long tail assets. For example, like someone trading for like pancake, cake into bake, right? And we don't have either of those 2 assets in the pools. But the way like the algorithm handles it is it swaps cake into like BUSD, and then BUSD into BNB, and then BNB into bake. So like we'll catch the middle part of that transaction. So it's very interesting in the DeFi space how all these pieces fit together. We're getting flow from people who aren't even touching the assets that we have in our pools, and they don't even realize that they're doing it. But yeah, that's going to happen. And eventually, Jen, we're going to have products that are catered more to the end user, like yourself, who might want to just go on there and trade with really good prices. But that's maybe a few months down the road.
So I'm not trading for free, because you do feeless, right? Maybe I can ask another question about that, but there's no fee, but I still have access to all of the liquidity. So there's going to be less slippage and everything else, right? Because that's a big issue right now with just making a simple trade is you have to up your slippage and, all of that. I'm paying the fees, but ultimately my results are going to be better with WooTrade being in that mix.
Yeah, exactly. Like there's, I think our fee was set like between 5 and 10 basis points, and a basis point is like 0.1 or 0.05. It's very, very small. By comparison, like the Uniswap fee is 0.3, so it's 3 times or 6 times what our fee was. And the slippage is obviously like less slippage on our platform. So yeah, the trading. The whole trading, the price execution is a lot better. And that's pretty much what WooTrade's been about since the beginning, and that's what we want to deliver. And that's how we plan to empower all these protocols and dApps with that.
Okay, and then I had one more, if I may. We were talking yesterday about the burns. How exactly do the burns work? Because I see the announcements, we burned however many tokens, and I think it's monthly, if I'm not mistaken. But what determines that number?
It's just very basic. It's just the revenue, and it's 50% of the revenue that WooTrade earns from market-making rebates, from fees, from people borrowing money from us, from any sort of financial service that we provide. And so as we grow, we expect that number to increase, quite a bit, assuming that the business model's succeeding. And then we burn that. And one of the reasons we do this is not just because it's a cryptocurrency gimmick. Like a lot of people do this to try to inject value into their token. But we have like this cycle basically where we're giving out some rewards, not a lot. We're giving out some rewards to incentivize early usage. And the idea was we would give out negative fees, not just zero fees. We'd give out negative fees to early institutions. And that would create some inflation, but then as the usage brings value to the network, then we would capture that and then burn it, right? And it would stay kind of at a stationary level, but it would the whole time we'd be growing, right? Because the people who add value would be getting more benefit. So that was kind of the basis. Yeah. And that's what we're doing now. But one interesting thing that's happened with the whole negative fees, when our Woo token price shot up, a lot of them didn't feel comfortable staking at the highest level for negative fees. And they thought, well, I don't want to be holding like $10 million, whatever dollars to get to negative fees. I'll just hold it at zero fees. That's better. Or I'll pay fees. And that's even better because that means we earn more revenue and we don't have to inflate the supply, but they're still using the platform. So that's been an interesting thing that we've noticed. And that might go away over time as people become more comfortable with the Woo token and holding it. We're not sure exactly how that's going to play out. But I mean, right now the model seems like it's going to be very good. The price is going up, which is probably the best indicator that you're doing something right. So we'll keep doing that, and hopefully things end up very well for everyone.
What exactly is the negative fee? I know that probably sounds like a silly question because it seems like it should be self-explanatory. Like it's a negative fee, but I mean, I've never dealt
it's just
firsthand with a negative fee.
It's really to incentivize volume because the more we grow, the more value we offer to everybody, right? The more liquidity we have, and then bigger platforms want to use us because suddenly we have better trading environment than they do, right? So the bigger we get, the better. Negative fee is just something like if you trade, like $1,000 worth, and you get like a 0.01 or something, and it's obviously for an institution or one that has like an exchange, like clients are trading. This can go up. It can be pretty significant. So that's like a way to incentivize usage.
Okay.
So
I had go ahead, Crypto.
I was just going to ask, so in order to qualify for the airdrops, do you have to be on a particular exchange, or how does that work?
We're going to have some clarifications on that pretty soon. Like obviously WooX, our platform is going to be one, and that's going to happen in June. And then we also want to do it in the DeFi space to like liquidity providers who are, offering their capital on something like SushiSwap or Uniswap. They'll have to talk about that with the people who are designing it, but we want to incentivize people to put their assets into use in DeFi, and that's one great way to do it.
Okay. And also, I'd like to dox Erica. I want to find out. I want to hear his or her voice. Chainlink's going to 50 tonight, guys.
Hey, Ben, I had a question. Kind of going back to the milestones. Could you kind of talk about what WooX social trading is, and also the Woo staking for asset management that's coming down the pipeline?
Yeah, I think that's going to be one of the bigger things for us. Is the social trading, where basically people who are very confident in their trading abilities can basically let people either contribute capital, which then they trade for them, and then basically like a staking, and then they get some of the most of the profitability of the trading strategy. Or there's another one that's like copy trading, which is basically like if this person does this trade, then your follows it into the position, right? So these have been relatively unsuccessful. Although a lot of people have tried them on a lot of exchanges, it's been unsuccessful mainly because there's not that many good traders. So that these people don't want to be exposed if they're not a good trader. And then the other reason is they're either so successful at trading, like the guys who founded WooTrade, that they don't care about this sort of thing. So the reason why we're pretty confident is because we can put some of our own trading strategies on there. And that will be very attractive for somebody like me, probably people like you in the audience who want to get value from trading, but aren't good traders, or are good traders but don't have time to commit to it. So you could essentially just invest into this product, and then you would share the rewards, which is really cool because some of those trading strategies have really high profitability, and it will probably be capped because obviously it's limited, like how much capital they can take. But then that could also bring value to like blue stakers because those would be given like priority over these sort of products.
Yeah. So will that be like shadow trading?
Yeah, exactly. It'd be something like that, or it could be more direct, where it's like depending on the different strategies. It could be where they just actually take the capital because you've staked it into the platform, and then they put it into it. And then that's similar than they do for institutional clients. Like they have millions of dollars from institutional clients that they trade, and they're very good at providing very high returns. So
very nice. That's the path. You guys have to take.
Yeah, and that's what we hinted on at the beginning when we talked about like wealth management. Like these are tools that the elite have been using for decades, right? That's what hedge funds are. But to get into a hedge fund, you need $1 million just to get in the door. And we're trying to do it where you could do this sort of thing with $20, right? So that was kind of the motto, which was disrupt markets and empower the individual. That's the goal. That's what we're trying to do, and hopefully that's how it plays out.
Yesterday, Carter kind of touched on the significance.
Hey Ben, I have a few people.
Oh, sorry. Go ahead.
No,
somebody else can go.
Go for it.
Yesterday, I was kind of asking Carter, and he touched on it a little bit, but maybe you can explain it to me once more, the importance of the dark pools.
I mean, the dark pool, it's just about having liquidity that's not fragmented. It's just about having one place where you can execute really large trades without worrying about slippage. In traditional finance, it's more about, like, if, for example, if you're like an Elon Musk, you don't want what you're buying to be public knowledge, because if you want to buy a lot of it and people find out that Elon Musk is buying it, then the price will shoot up, right? And that affects the price you can get. So that's kind of the utility of a dark pool in traditional finance. But in our scene, it's less about the privacy. It's more about just getting rid of the fragmentation in liquidity and making a giant pool. So that's really all it is.
Gotcha. Thank you.
Mm-hmm. I think there's another question.
Yeah, I think you said you had some questions from the audience.
Yeah, I have a few people requesting if we want to let on to some guests from the audience to ask questions. Do it.
Quick question, sir. When is Moon?
Well, I mean, like the price of the Wu token is very important, but at the same time, like markets are super irrational, and the focus is obviously not like, obviously we have some things, some strategies we could take. Like, for example, forcing listing onto like big exchanges. But once you do these sort of actions, like they're gone, right? And then the community has nothing to grasp onto. And it's like focusing your efforts on that. You're not focusing on product development. You're not focusing on building strong communities. You're not focusing on the things that are going to make WooTrade succeed over the long term. So, I mean, we're very cognizant of the fact that the token value is very important to the community. We're going to take actions to increase the price. I can't say that. We're taking actions to make the company, as valuable as possible, right? And that doesn't mean we go out and we hire a bunch of TikTokers to go make WooTrade memes. Because those actions are kind of a waste of resources and a waste of.
Yeah, I was just fucking with you, killing dead air, man. While people came on, you don't gotta tell me it's going up, bro. It's all right.
Well, no, I mean it's a huge question.
Yeah, no. It's definitely something I'm interested in, but you don't work yourself up too much. I was fucking.
You got me good.
No, yeah, but yeah, I totally agree. It makes me happy to hear that you're not really as worried. Like, it's important, but I don't know, all these tokens that are worried about, like, I don't know, the Binance Smart Chain lottery tokens that just are purely like, let's get it as expensive as possible, get everybody rich, but like the tokenomics are shit. So yeah, I don't know. I was just fucking with you. I really appreciate that Woo's not doing that.
Yeah, yeah. And if you want to look at like what Solana, like some of the projects there did, and you look at Step, like the price was up at like $9, and everyone was really happy, but now it's down around like $3. And there's just basically that, like guerrilla marketing, and then like super inflationary tokenomics, where if you stake on Radium or whatever, you're going to get like 400% APY. So you attract the wrong kind of community when you do that. You attract people who are just looking for quick profits, and then they're going to dump and run. And we actually did the opposite. Like we had a really slow start, and this is in the middle of a bull market, where so people are really distracted. Like they're not going to look at your fundamentals when things are shooting up left, right, and center. We got guys like Carter. We got guys who are able to like look at the fundamentals of the project and believe in it, and we're really fortunate that that happened. I mean, that wasn't exactly the plan, but the way it happened worked out really well. So now I think our community is super resilient, and even though we're like 147th, like we're one of the loudest. Like we're always in like if you look at Lunar Crush, we're always in like the top 50 in terms of social metrics, and that's something that we want to keep building on. And I think it's going to pay off as we grow into this community, and the community grows with us.
I just learned about this the other day. Can you elaborate on what Lunar Crush is? It's super fascinating. I think it's a really important tool.
Yeah, I mean, they just scan like all the social media platforms for hashtags, and that's why using hashtags is important, because it gets tracked by this sort of thing. But yeah, they put that all together, and then they have a few different algorithms, and one includes like price plus the social media. One's just like social media. They also track like the spam, where how many oftentimes people are just spamming the same thing over and over again, and that's like a negative indicator. But yeah, it's really useful in the marketing space to see how your project's being talked about.
It's a website called Lunar Crush, and it's basically just a sentiment tracker for different cryptos based off social media traffic. And it's totally free. I think it's lunarcrush.io, but I'm not sure. Just Google Lunar Crush and you'll find it. But yeah,
I got two tools for you guys. Machine Trader, which is the Modern Society's creation right there. And the other one is evai.io. And they're about to get listed on Uniswap Friday.
Awesome.
Check out those two tools, man. Modern Society should talk, man. Talk about your site.
Yeah, Martin, if you want to hop on and go into that a little bit, definitely request.
I noticed we had a new speaker on. Was there another question?
Hi, yes, I have a question. Do you intend to eventually serve the U.S. market? Sorry, I'm late, so I don't know if that was answered already.
It was answered, but I'll touch on it really quick. Like basically, we can't really say we will until we can, because you can't, like you have to make sure everything is done in like the regulatory process. And like what I said was, I don't see like a path to success for WooTrade over the next coming time period. That doesn't include one of the biggest markets in the world. So we're working on making ourselves more accessible in different regions. But that's just the CeFi side. And if you want to get involved in the DeFi side, then there's less restrictions about where you're from.
Awesome. Thank you.
No problem.
How you doing, Martin?
Hey, guys. I'm not sure if you can hear me well. I'm actually just going through an airport at the moment, so if I'm in or out, apologies. But can you guys hear me okay?
Yeah, we can. Where are you going?
Yep. Okay, great. I'm actually just heading back out of Europe, back into the States, so I might be in or out, but bear with me.
Cool.
But yeah, I saw someone mention references Modern Trader, but it's actually called Machine Trader. I'm not the sole person responsible for it. It's actually like a quite an extensive big team out of Basel, Switzerland. And I'm also I'm coming into this space late, so I'm not trying to barge in here and change topics or subjects. So that's not my intention at all. If that's as it comes across, I just saw you all were on, so I wanted to pop on. But to give you guys a basic rundown, it's been a team with over about 6 years of different blockchain and fintech development skills from API to all sorts of things. But the basic scope of it is due to legal and logistical reasons being based out of Basel, Switzerland, able to basically tap in via API to all the major exchanges around the globe, as well as scrape data from various social media platforms. All of that data is fed into machine learning algorithms that not only in live time machine learn and develop those skills, but specifically take into account every single past transaction from multiple exchanges and evaluate that into consideration moving forward. All of that is then put into machine learning, which is fed into an algorithm, which then triggers bot trading. All of this bot trading is then put available for every user. All of those users are able to tweak and adjust and modify those bots as they see fit. If one user basically cooks up a pretty nice recipe, for lack of better words, they are then able to post that to their social part of the platform. And then, therefore, if they have like a bot that has, like, let's say we've got a few people with like a 99% success rate that are turning profits of anywhere between 2 to 20% very, very quickly, and they can leave those on 24/7. Then that person is essentially allowed to rent that tweet out to the rest of the what's the word for it? Sorry, English is like my second language. So basically, like the rest of the users on the platform, they're able to use that their tweet essentially. And then the nice thing is it really sets an incentive for everyone to really kind of dive in on the technical side, because if you're putting out a tweet, for lack of better words, and if other people are using it, coming out of the exchanges side, the platform side, not out of the user side, they get to keep about 20% of that. So let's say, for example, I create like a really fantastic tweet to the bot or the set of bots, and it becomes quite popular. Every person that uses that bot, I actually would get paid for it. So it can create quite some lucrative income and passive income for any people who are a little bit more on the tech savvy side of things. So it's a pretty fun thing. A lot of the trading is not quite available for public use yet. That being said, I can't give exact dates, but things are going to go live pretty soon and pretty quick. So I'm pretty excited for that. So if anyone hasn't checked it out, it's actually a link to my profile. And if you're more comfortable with it, you can also just go to machineandtrader.com and check it out. It's free right now. It's still in beta. One of the nice things is part of with the social platform is designed for the early users to have benefits in the long run. So people that kind of sign up and get hip to it sooner, they'll actually not just see more benefits in the future, but they'll actually see some discounted rates, etc.
Thank you, brother. Modern. This is Crapto, buddy. Give me a shout out.
Yeah, thank you. I appreciate it. Now, I really didn't mean to shill like a project or anything. I just heard you say it, so I was like, if you're curious about it, I might as well tell you, like, at least I'll scratch the surface. If you're more curious than that, you're like I said, it's free, so you're more than willing to go check it out if you like it.
Hey Ben, I have a question.
If you don't, you're out.
Talent is talent, buddy.
Yeah, but anyway, seriously, didn't mean to interrupt. You guys were in like a deep discussion on another topic, so I'll kind of silence myself now. Continue on.
So I think it's important not to shill other projects in this. We're not kind of trying to do that. But I have a question, Ben. As a developer, how can I get involved in WooTrade? Let's say I want to build a project on WooTrade. I'm not going to name my product. Don't want to shill it, but how can a developer kind of get involved? I love what you guys are doing.
Hey, sorry, can you hear me?
Yeah, I can hear you.
I just got a phone call, so I missed what Modern Society just said. Could you, maybe he could repeat that?
No worries. Yeah, so I'm a developer myself.
Okay.
Just kind of curious, how can I kind of get involved with WooTrade? Let's say you want to build excuse me, a little under the weather. Let's say I want to build a product, maybe that could help the community. What ways could I go about doing that?
Well, I mean, you'd always be welcome, Kenneth. Like we're trying to put together a lot of our community developer resources, and there's been quite a few people who have reached out, and there's a lot of tools we need built, especially in the DeFi space, and especially because we're attacking so many different strategies with networks. Like we want to be on Polygon, we want to be on we announced VeChain last night. BSC has always been welcoming, and that's a good way to get in close to Binance, right? Echo, Avalanche, like all these networks, they offer a lot of volume and users. So we're going to need tools that can do that. So I think probably what we'll do is you can message me, and I'll try to throw together like a developer group where people can start bouncing ideas around and see where things are needed. And then we can kind of mobilize everybody.
Sweet. Thanks, Ben. Appreciate it.
No problem, Kenneth.
Ben, so did you say that the WooX staking would go live, said June or July, summer?
Here's the thing, like the staking's live now on beta, but it's closed, right? Because it's invitation only. We're letting people on relatively slowly because the product team is trying to get some insights into how the development should be, tweaked to really target our target audience. And the goal is to have a more advanced and open product around mid to late June. And then there is some concern, though, that if we do like the official launch then without the mobile app and futures, which is like August is kind of the time we're shooting for then, August or like early September, that maybe people will not be so happy with the experience because mobile is very important. Future is very important to active traders. So we're looking at rolling out like a more open, like beta style with more features in June, and then just keep dropping releases all throughout the summer. And then just doing a really big launch with, mobile futures, all of it together, the finished package, towards the end of quarter, that'd be mid of quarter 3, I guess would be what that would be. Right? Yes, July, August, September. Okay. Yeah, so that's kind of the plan.
Sweet, thanks. I definitely look forward to staking on Woo.
Yeah, definitely. You guys should get in touch if you haven't already, and we can see about getting you guys on.
Hell yeah.
Yeah, I wanted to ask you a question. Sorry. Super High has already thrown more light into most of what I wanted to say. I wanted to ask more on staking because I just recently started holding the token. So since you said you could DM me about that, I think I'll do that after this space so that I'll get more info on that because I really want to do more staking.
Awesome.
Looking at it as a long-term investment.
More speaking? I'm sorry, your mic is coming through.
Yeah, I say I want to do more staking instead of just hodling the coin. Okay?
Yeah, absolutely. That's kind of what we want. We want more active participants. And when I say active, I don't mean just dumping your assets onto a platform and then waiting for free money. Like it's putting it into investment products or putting it into DeFi applications and, earning rewards, but in the process, you're providing a service to other, people who want to trade and they want to access that liquidity. So that's really what we're looking for. And we're looking to create a whole subsection of this industry that's not about these unsustainable yield farms. It's about people making returns on their capital in a very sustainable way. So, if you're interested in that, then definitely stick with us, and you'll enjoy some of the products that we come out with because, Kronos is very good at making yield. That's something that our CEO, Ran, always says. We're good at that. We're good at making yield, which not many other people can say in the space.
Could you, for the people that don't know, go a little bit deeper on who Kronos Research is and what they do?
Sure. It's like a multi-strategy, high-frequency trading team. So what that means is multi-strategy means that they have different teams working under like one central team, and these different teams are all doing different things. So like one could be very long on something and one could be short on something, and they tend to be non-directional. So it's not like us when we trade and we think like, oh, I think Bitcoin's going to go to 70K. Long 10x, right? They're more about very short time frames in terms of seconds or minutes, Maybe the longer time frames could be even like days. But yeah, it's very based on certain things they notice with the alpha in terms of data. When they see certain volume or they see certain trends, and then they act on that, right? So that's the different strategies, and they're working completely separately. So sometimes you'll see some strategies make a lot of money and some make less. Sometimes some even lose money on a particular day. But the point is the risk is spread out because they're all doing different things. So you don't get blown up. Like if I'm a trader and I just go long on Bitcoin and it crashes and I lose all my money, right? It's managed a lot different than that. The other thing they do is like market making, which is more just placing liquidity on either side of the price. And then they can earn fees from exchanges for doing that sort of thing. They can also earn money from that, from the spreads as well. And yeah, arbitrage is another one. Like if the price is up on one exchange and then over on another exchange they see it's less, they can buy on one and sell on the other. So that's arbitrage. So they do all these sorts of things, and they do 5 to 10 billion per day. That's like an average that spikes up sometimes on like really crazy days. And that's, if you don't have a concept of that, it's like a pretty sizable. It's like 2 to 5% of the crypto markets. I think it's less than that now because the market volume has spiked a lot, but it's a lot. So if you've traded on Binance or OBE or OKX and you just randomly bought, an asset off of somebody, there's a good chance at some point Kronos was on the other side of that trade.
Hey, Ben, shifting gears here a little bit. You had talked about VeChain like earlier this evening. Can you talk about Woo's partnership with VeChain and like the support for the NFT ecosystem?
Trying to connect another guest right now. Sorry, guys, I'm having connection issues on my side.
Okay, well, I can answer the VeChain question if you want.
Yeah, that'd be great, Ben.
Okay. VeChain, like I've always been a big VeChain guy. There's no secret to that. They got me in kind of in the door, and then like I'm still very close with that team. It was like Sunny and Sarah, Kevin, who's no longer with them, but then even people that you guys might not be as public in terms of like developers and stuff. So when they finally made this announcement that they were moving to like a DeFi ecosystem with ENFT, it's an awesome opportunity for us because, I mean, they're like the number 14 cryptocurrency in the world, 14 billion market cap, really passionate community, and connections to all these really big companies. And they do things in a very professional way, right, which is also good for us. And they don't have anything there right now, so there's an opportunity. It's like a clean slate. They have one DEX called DexChange, but other than that, it's a clean slate, and we can come in and support them with bridges and build backends for like DEXs and things like that. And we're very excited to see where that will go. I talk to them quite frequently, and there's no limitation really to what that partnership could possibly bring. I should clarify, it's not a partnership yet. It's just we've committed to supporting them. Let's put it that way.
That's awesome. Patel, do you have a question for Ben?
You there? Patel, what do you got for me?
Mike, I was having connection issues, man. I apologize. All right, so ecosystem-wise, man, you work with a few different, I'm assuming, companies that are their teams. Which ones would you recommend? When it comes, you were speaking about VeChain, right? Which hopefully a lot of people definitely look into that. I focus on the technical side when it comes to the analysis because, as you know, on cryptocurrency, you don't have too many fundamentals to work off of other than probably learning about the utility. And then you also, of course, have the volumes. Obviously, that is somewhat dictated by the sentiment. What would you say? Okay, so you have people in this space. I don't know what their levels of experience are, right? I've been investing for a couple of years. I'm not completely knowledgeable about all of the newer, you want to call it the side chains that have come off of Ethereum during the multiple forks of Ethereum, or the DeFi space for altcoins. However, I just wanted to get your take. Like you obviously talk to DeFi's people, right? So that's what my question was.
Yeah, it's an interesting question, and I think a lot of it boils down to like your risk tolerance. And I think for people who, well, obviously if they don't have any risk tolerance, they shouldn't be in the space to begin with. But for people who have less risk tolerance, obviously Bitcoin and Ethereum are where I tell people to start. And then beyond that, you have a top 20 where you have things like Chainlink and you have VeChain who have demonstrated they're sustainable. They're actually functioning and building products, and they have strong communities. So yeah, those are definitely ones. Like also we're talking with Algorand. That's another project that has solid resources and are building things. Who else? I mean, like I love the DeFi scene. I love things like Aave and Compound, Uniswap.
Aave's definitely been powerful since last year, right?
I have a question about Aave.
Okay.
Mm-hmm.
Do you mind? Yeah. Just because you brought it up. Okay, so are there any future plans to possibly use Woo token as collateral to borrow against and trade, possibly on the Woo, like on the exchange?
Well, Aave is very difficult to get onto because it's decentralized voting, right? So you can't just call somebody like, hey, list us, right? You have to get a big community vote. So I don't think we're there yet in terms of community size and volume, liquidity, these things. But that could happen very quickly if we continue.
Like not even necessarily Aave. It's not something that you guys might be looking to do yourselves in the future.
Yeah, no, but I mean, we've had conversations with Aave, and we want their type of solutions to exist. And actually, a lot of this happens on exchanges. When you go on exchanges and they offer you these like staking products, a lot of times what they do is they just dump it into DeFi products, and then they give you the rewards. So like they're offering this service, but it's really just utilizing the DeFi space. So we can do things like this. We want to do it more transparently. And we want to really capture their community and our communities together and share that value. Yeah, I mean, that's one thing. Aave for sure. But I mean, there's a lot of these different protocols like Cream. Cream Finance has a lending protocol. What else is out there? I mean, there's a lot on BSC and Hecko that we're talking to. But yeah, of course, like that's one of the foundations of DeFi. Apart from trading, I mean, lending is like the next logical step. So yeah, we definitely want to have that.
Cool. Thank you.
Dude, man, check out a project called Enzyme Finance.
Okay.
So it allows you to kind of get a fund. You were talking about how you have teams that you guys, I guess, that do strategy investing.
Mm-hmm.
But it's really cool that they use the synthetics wrapping protocol, and you might want to check out, man.
Yeah, I've heard of Enzyme, but I haven't looked into it too much, and I'll check that out. Like we're very interested in the synthetics asset space as well, just because
Can
the extension of these
synthetic assets.
Okay, sure. I mean, a synthetic asset is just taking something like gold and then pegging a token to it in a way that you trust that the underwriting debt is going to still be there, right? You get that value from it. So. It could exist for something like stocks, like we see like Tesla or Amazon stocks on the blockchain. Could be something like gold or other like rare earth metals or something. Could be currencies like Forex. And then the other ones are like interest-bearing indexes or interest-bearing tokens. This is one that we were looking at. Like if we talked about the Chronos strategies, so let's say you invested in like a strategy. And then instead of that money just sitting there, you could get like a synthetic asset token, like an LP token essentially. And then you could, if you wanted to be in and out of that position, you could trade that on a secondhand market. And if you don't trade it, this token would be increasing with interest. So it's a very interesting like DeFi tool that hasn't been explored very much. And I think a lot of tokens are moving that direction. And you see like Uniswap V3, where you have the NFTs. They're creating this sort of, this token represents a stake in something else. So we're going to be trying to create a lot of products that borrow from this idea, because when you stake, it's fine, but it's not like not everyone wants to be locked in. So if you can do it in this way, you have liquidity on a secondhand market. It's a lot more attractive, and it's like bigger parties are willing to do this because they can get in and out of positions.
Yeah. Hey Ben, go ahead, Connor. I'm sorry.
No, I just think it was just something I can help elaborate on if he is interested in. I happen to freelance for one of the companies that does do those NFT and LP tokens for staking. The Toshimon team, they sell basically gaming cards, and 2 gaming cards that they sell. One's called a Cyber Hornet, and it's like 2.3 ETH, and the other one is 0.8 ETH, I believe, last time I checked. And you get these tokens or gaming cards that go on your OpenSea account that just represent the amount of money that you've staked to the project. Could you elaborate on how like that can? It makes sense in the gaming aspect, right? But at the same time, there's so many different uses for LP tokens. Could you kind of explain those to people?
Yeah, the LP for sure. Like the LP just makes sense because it's just giving you liquidity on a position. So you can do whatever you want. You can hold it, you can trade it, you can speculate on it, you can sell it, right? So this is very important for decentralized finance that you have this liquidity. That's one thing. I mean, the thing that Uniswap V3 did with creating NFTs, it seems a little excessive. Like the NFT functionality hasn't really validated itself, like why you need that as opposed to just like an LP token. But I mean, if you're holding these LP tokens and they're accruing the value of whatever product that they're staked from, they're created from, then that's a really big thing. I mean, that's how digital assets should be moving, where people, every time you're holding an asset, it's accruing interest, it's accruing value. So that's something that we're very mindful of when we're designing these products. Like, this is what people want. People want yield. People want this, like, put their capital to work. That's what one of the other speakers said. You know, like, I want to put my capital to work. So that's about the product design that we're trying to build.
Yeah, I think what you just touched on is the fascinating part with these NFTs is they create like a secondary ecosystem, right? Like, so for the Toshimon team, when you stake the cards, you get Toshi Cash. That's the in-game currency, and so you're not only are you're investing in the project, but at the same time they're paying you out in a secondary ecosystem that you also believe in because you staked, and then it kind of becomes like an infinite resource of or kind of an interchangeable ecosystem because the tokens you're getting paid out with for staking have value in the project, but also you can sell those for more of whatever you're staking in, like ETH, and it's kind of just like this backwards compatible ecosystem created by staking. I was just curious if like I don't know, Woo had like I saw BNT came out with like shirts that like are it's kind of like the Unisock concept, right? Like if you want to claim the shirt, you have to burn it and then they mail it to you. But if you want to just own it on the blockchain, you kind of just own it. Does Woo have any kind of promo ideas floating like that around, like on the NFT LP thing or Uniswap type stuff?
Yeah, I mean, the merch has been insanely popular. People always want like merch, and it's fun. Like you because you're invested in a product, you put like a lot of research in the product, and you want to represent it, right? That's something that we have a small team that's working on now. We looked at both concepts in terms of like the get the NFT and then burn to claim model, and also just like the ship it with like an NFT attached to it, and then you claim the token and you can sell it at that point. But I think it's going to be a lot of fun. We're creating a lot of merchandise, and we want to be very user friendly. And nothing's more user friendly than getting a big, a hoodie, socks, like this kind of thing from a company. So yeah, that's definitely in the cards.
Definitely. I think everyone appreciates some swag, Go Woo sweatshirt. Kind of switching gears, I had a question about how you see the potential growth of Woo over the next 3 to 5 years, and if you potentially see maybe on a monthly scale, and that time, trillions of dollars being traded through volume.
Ooh, like putting a number on it's really tough because we don't know how much the industry is going to scale over this time, or it could recede even. But it seems likely it's going to go up. And like I'm very optimistic about the growth of Woo Trade because this thing's been like a rocket ship. And I don't mean just the price. I mean just like the growth, the partners, the interest, like every single metric we could possibly point to. And like the thing I touched on earlier about like DeFi, we just created 5 pools with like 2.5 million in it, and suddenly they're doing like 900 million a month with over 2.5 million. I think it's pretty incredible what you're able to do when you can outprice everybody on the market. And that's essentially what we can do. We can create better pricing than anyone, and so it's exciting. I think there's very few limitations to what we can do. I would be disappointed if we weren't, like mentioned in the top exchanges, top cryptocurrencies. Just when people are getting into cryptocurrency, there's the few they always know about. Like I would expect Woo to be one of those.
Yeah, I definitely think that as the regulations in China progress, and is there an echo? Oh, my bad. And if it's possible that the U.S. is allowed to trade on there, I feel like you would get a lot of retail investors that would appreciate no trading fees and lower slippage and all the benefits that Woo provides. So I definitely can see onboarding of tens, if not hundreds of billions of dollars of volume coming through.
Last night,
it's really hard to predict, but yeah.
Last night, Carter was asked a question about like if Woo sees any competitors in the dark protocol scene, or in the and his answer was kind of not really, especially since it's not open source, right? But then I kind of asked the question: does Woo kind of consider like projects like Matic a competitor, or just like lowering slippage for trading?
Okay, no, is Carter not here tonight? Is he slacking? What's he doing?
I'm not sure. He might be in here, but yeah, he might have took the night off after last night. We might have bombarded him.
Okay, guys. Really quickly, sorry to interrupt again. I just wanted to really clear the air. I jumped in here late because I was going through an airport, saw you all were on. Literally by zero intention did I mean to shill anything. I stand behind a lot of very credible projects, so not at all my intent. Ben did not realize this was kind of like a chat intended, oriented towards Woo. So by no means did I mean to come in here at left field. So just wanted to clear the air.
We asked you about it. It's all good.
Yeah, but anyway, I'm a very clear-sighted person, so just want to address that. Anyway, big fan of Woo. I've got to bounce, but wish everyone best of luck and everyone on the chat. Great space, Woo, great project. Everyone best of luck.
Don't sweat it, bro.
Thanks,
we
man.
asked you, bro.
Yeah.
See you, Mark.
Yeah.
See you.
Have a good flight.
Safe flight, bro.
I appreciate it. Have a good one, guys.
Okay. Yeah, dropping back to the competition thing. Like, it's really hard to find like a competitor when you're talking about like trading platforms, because as an aggregator, you just kind of aggregate each other, right? For example, if there was another dark pool and they were having different, diverse volume that was different from ours, it would make sense for both of us to work together. And yeah, so like I don't see anyone out there and be like, oh shit, if they succeed, we're screwed, right? There isn't that. And you mentioned Matic, like part of Polygon's like a layer 2 network. We're definitely partnered with them, and we're definitely working on bringing our liquidity to their network. Like their pricing execution is only as good as the liquidity they have, right? So they're fast and they're cheap for gas, but they can't do the liquidity on their own. So if we bring that, like this combination of speed, block times, lack of congestion, and then low gas fee, plus from our side, like low slippage and high liquidity and low fee from us, like it creates a really good trading environment.
Yeah, 100%. That's why I wanted you to elaborate on, because competitors don't really you're more of like a foundation than like something you're trying to like compete. I don't know. I'm not speaking correctly on it, but there's no real point in competing with each other in a sense.
Yeah, competing is very 2017 in the sense like back then you had all the ETH killers, and you had like Bitcoin Cash versus Bitcoin, and then like Nano versus I guess IOTA or whatever other free one there was. But like for now, it seems like everyone's working together, and some people have differences of opinions. Like some people want to go to this layer too. Some people want to go in like Polkadot. That's fine, but collaboration seems to be the name of the game. So yeah, I don't see anyone. Like we've had conversations with nearly every project, and there's never been once like, oh, I hope these guys don't make it because we're screwed, right? So it's all good.
It's a pretty good sign.
Mm-hmm. Anything else?
If you were going to explain how to get into really just the crypto scene or business development as someone who is young and eager to learn, what would be two things that you would tell somebody?
Any particular skill sets that you have already, or are we talking like high school?
Maybe if you have some college or have dropped out of college.
Mm-hmm. Yeah, I would definitely think from a business development side, there's not any. I mean, just being a good speaker, and then understanding like business models. Again, like having some finance and economics never hurts. Understanding the technology well. You don't have to code. I don't code, but like business development is more of a people oriented thing. It's more like sales position in a traditional space. So just being able to talk to people, understand their needs, and then solving those needs are important. Being organized. This is also very important. Being able to do a bunch of meetings and stay up all night, like if you have to catch somebody on the other side of the world. So you have to be very motivated, and then that comes from like I said, like the very first thing we talked about today was just get out there, bust your ass for like projects, and don't ask them for money, and just let them know you're like available to help out in their community, and then they'll notice you, and then they'll start giving you certain opportunities. And it might not be much at first, and you might get pretty burned out, but if you keep doing it, eventually you'll get to the point where you'll find that like you'll have a lot of followers on social media. You'll know a lot more. You'll have a better understanding. You'll have strong networks, and then you're just in a different position, right? Then you're able to leverage all of those things to create something that you want. And for me, it was always about like waiting. There's a lot of opportunities to jump into projects that might have been like they might have paid me right off the bat, but it wouldn't have been good for like the long-term development. And then like eventually finding WooTrade, like a very big project, and being able to fit what they needed and provide value to them, like that was a good thing. So that was a bit of patience and just volunteering all over the place to get noticed. Hey, does that answer your question?
Sweet. Yes, it did. Thank you very much.
Hey, Paylink, did you have a question?
Yeah, I've got a kind of like a two-part question. I was curious, how does Woo utilize Oracle services? And then I was also wondering if you could just speak on your opinion of the future use of maybe Oracle aggregators that are starting to come out.
Okay. Well, for any sort of on-chain product we build, we're going to need oracles. And what we're using now is we're using our own because we're quoting from off-chain. But we don't want to really go after this market because we're not an oracle provider. That's not our strength. Our strength is traders and then building products around trading. So we're working with like Chainlink, obviously. We've also spoken with API 3 because they're doing some interesting things with the more traditional world. And yeah, I mean, I think like you said, oracles need to aggregate, right? They can't just have a single source. Otherwise, if something happens to that source, then the oracle is useless or malicious, right? I mean, both of those possibilities. And we're going to want to try to increase that because we are by nature an aggregated price source. We aggregate across like all the top exchanges, and that's so we can provide a lot of value to an oracle provider. So finding different partnerships there, and then using their technology and their networks to really amplify our strengths, I think that's going to work out really well.
Thank you. I'd just like to clarify, Oracle Aggregator, I'm curious what your thoughts are, though, on a service that pools together data from multiple oracles.
Okay. Well, I mean, that's just really like where you aggregate. If you're aggregating in front of the oracle or you're aggregating behind the oracle. So I think both of those could be successful. But eventually, at some point, you will have a centralized point of failure. Like if you're aggregating a bunch of different oracles, then that server that is aggregating it, eventually that becomes like a point of failure. So it's hard to get around that. So what a lot of people are doing now is just using like both. Like they use like Chainlink and then like something else like band protocol or something. That way, if one goes offline, like the platform's not totally screwed. I mean, you could have like 99.9% uptime on an oracle, but that 0.1% would be devastating. So yeah, I mean, we'll see how that works out with the technology, but they still have to solve that like single point of failure issue, or they just need to have two. But I think generally speaking, aggregation is the key to everything we do in this industry. Whether you're aggregating oracles, you're aggregating liquidity, you're aggregating trade volume, like 1inch does. Like all these are eventually going to be more successful than the brands themselves. Although like right now, like Uniswap is a very strong brand. I think they could slowly lose some of their market share to a dashboard that's able to aggregate across multiple sites and do it in a more user-friendly way. So I'm a big aggregation guy to answer that question.
Yeah, I appreciate it. Thanks.
Cool. Thank you, Paylink. We appreciate the question. Any of the other speakers have additional questions they want to ask Ben? Sounds like we're good. Ben, I really, really appreciate you coming on the base space, taking your time out of your morning to talk to everyone. Did you have anything you wanted to say just to the listeners that are tuning in?
No, I think this was really painless. I think the questions were all really good. So I think you got a good group of you got a good little network here, and you guys should definitely keep using the advantages of each other. And I think if development keeps going the way it is, I think everyone in the space, I think we're going to be in a pretty good position a few years down the road. So yeah, I look forward to jumping in here anytime, talking with you guys and talking with Carter. And sure, if you have any questions, reach out.